trillions of dollars of global capital are in motion, as markets react to expectations that global geopolitical tensions could ease. A rapid reallocation of wealth is flowing directly into the Indian domestic economy, and it is starting with the most tangible asset available. The first signs of this shift are on the front page. Gold prices have dropped from record highs, triggering an immediate spike in advance bookings. The subheadline notes the specific driver. Investors expect bullion to fluctuate as geopolitical tensions soften, creating a narrow entry window. On the ground, Indian consumers are capitalizing on this dip. Retail buyers are securing physical assets, locking in their purchases before the market corrects itself. This price drop provides a strategic opening. Retail investors are pulling capital into physical gold to position themselves ahead of the demand spikes tied to the upcoming festival and wedding seasons. Global stabilization is driving a localized consumer rush. Across the country, buyers are converting digital wealth into physical, safe haven assets. While retail capital flows into gold, corporate capital is facing a physical roadblock. In the technology sector, the money is available, but the raw materials are not. Under the headline Circuit Breaker, analysts project a 30 to 40% drop in electronics output within 3 months. The cause? Demand for AI servers and supply disruptions have caused copper-clad laminate prices to jump by 300%. The result is visible on assembly lines. Printed circuit board production is slowing because the physical components are caught in a global shortage. Mid-sized IT firms are being forced to adapt. With AI adoption growing, but hardware limited, companies are shifting away from traditional billing and pivoting to outcome-based pricing models to protect margins. While consumer cash flows into gold, corporate tech budgets remain trapped by supply chain paralysis, forcing the industry to restructure how it monetizes its services. To capture the wealth-seeking shelter from this global volatility, institutional finance in India is making structural changes at the legislative level. This legislative update shows the current strategy. A joint parliamentary committee is backing a comprehensive overhaul of corporate law, specifically targeting a process called reverse flipping. Reverse flipping is a maneuver where a startup, incorporated abroad, moves its legal headquarters back to Indian soil. Companies execute this move to lock in domestic tax benefits and position themselves for initial public offerings directly on Indian exchanges. Over the next 2 years, this mechanism is designed to pull offshore startup wealth away from foreign jurisdictions and inject it directly into Dalal Street. Legacy conglomerates are also responding to international volatility by deploying capital into localized physical infrastructure. This corporate infographic details that deployment. Legacy groups are pouring substantial funds into multi-story real estate ventures, like the Triumph project here. Alongside real estate, there is an expansion in hospitality. This chart projects hotel revenues hitting a 230 index by FY26. The financial logic relies on predictability. When global technology supply chains are disrupted, capital favors the reliable returns of land, concrete, and domestic consumer services. For established wealth, scaling real estate and hospitality provides a tangible harbor that isolates their capital from international bottlenecks. As a result, the healthcare sector has rapidly become another primary destination for this new domestic capital expenditure. The scale of expansion is clear in this report. Major networks now manage 17 regional hospitals and over 4,200 beds. Financially, the engine for this growth is surging operational revenues, which are immediately recycled into further acquisitions and construction. The investment philosophy surrounding healthcare has evolved. It is no longer evaluated solely as a public service, but rather as a resilient, core asset class capable of absorbing significant capital loads. By scaling medical infrastructure, investors are finding a stable, localized mechanism to anchor their wealth during this economic cycle. From retail buyers securing gold and tech firms navigating shortages, to startups repatriating their equity and conglomerates building concrete and healthcare infrastructure. The pattern is consistent. Amid global supply chaos, the smartest money is finding ways to physically anchor itself back inside India's borders. Thanks for watching, TradeX. Stay informed, stay ahead. Like, share, comment, and subscribe for daily updates on business, finance, AI, and global news.